Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today, September 22nd, 2025, we are tackling a really vast stack of sources. It paints a complex picture.
Global tech, finance.
Yeah.
You've got central banks, geopolitical stuff, privacy battles in Europe.
Right, and even some surprising AI breakthroughs coming out of healthcare. A lot to cover.
Yeah, absolutely. So our mission today is basically to distill the most critical developments from all this. We want you to walk away, understanding the connections.
Connecting those dots, seeing the tension between network strength, state control, and how tech is pushing back. That's the goal.
Exactly. Defines the digital economy right now.
Okay, so let's start with the immediate market vibe. The short-term mood, well, it's muted.
Definitely. Prices are pretty flat after the latest FOMC announcement. It's kind of solidifying those investor fears about Red September, as people are calling it.
Yeah, that phrase is catching on.
But look, the first key insight here for you is context. We can't lose sight of the long game.
Right. Important reminder.
Historically, significant new all-time highs, they typically show up roughly 18 months after a Bitcoin halving event.
So while the short-term chart might look, boring.
Exactly. The clock is still ticking on that longer-term historical pattern. Keep that in mind.
Okay, let's unpack this sort of financial stagnation then with some underlying data. Because beneath those flat prices, institutional confidence looks surprisingly high.
Yeah, that's interesting, isn't it? We saw pretty robust ETF inflows over the last couple of weeks, over $270 million combined for Bitcoin and Ethereum.
And the breakdown there is telling, right?
Oh, absolutely.
Yeah.
The insight really centers on, the comparative dominance. Bitcoin is still clearly the main focus for that institutional capital.
How much bigger were the BTC inflows?
BTC inflows were nearly 5 times greater than Ethereum's, around $222 million for Bitcoin.
Wow. Okay. So that confirms where the big money remains concentrated, solidifies Bitcoin's role as that sort of institutional digital reserve asset. Now, let's look at the network itself, the mechanics. Because Bitcoin difficulty, it's telling a more complex story underneath the price action.
Right. Mining difficulty just surged to a new all-time high. After the latest adjustment, 2016 blocks.
Which means the network hash rate is also sitting at a record level, about 1.1 exahashes per second.
That's right. And look, this is unequivocally a sign that the network is ridiculously strong, secure. It takes massive computational power to even think about attacking it.
Good news on the security front, then.
Yes, but this strength harbors a major contradiction, a big one.
Which is?
Rising centralization. The difficulty increases, combined with these high energy demands. They're rapidly squeezing out the smaller miners. Even some, publicly traded companies are feeling the pinch.
And the sources we look at highlight that this is being accelerated by, well, a new kind of competition, a powerful one.
State involvement, yeah.
We're seeing governments like Bhutan, Pakistan, El Salvador, and also major energy providers, like in Texas, actually getting into the mining game themselves.
Exactly. And the key takeaway here for you listening, it centers on OPEX, operational expenditure.
How so?
Well, when a government or a big energy provider starts mining, they can leverage existing surplus energy. They integrate mining right into their core infrastructure.
So they don't have the same overhead costs.
Precisely. Not like traditional commercial miners. This gives them a huge cost advantage, and that just accelerates the consolidation, pushes centralization into fewer, more powerful hands.
Okay, so network getting stronger, but control getting potentially more concentrated. Before we move on, maybe a quick check on the cryptographic foundation, SHA-256. How's that holding up, especially with quantum computing fears?
Good point. It's crucial.
Okay.
So Grok AI, referencing some 2025 assessments from NIST and IBM, they estimate the probability of quantum computing cracking SHA-256 is, well, basically 0% in the next 5 years.
Zero. Okay, that's reassuring.
And less than 10% by 2035. So yeah, it's a powerful reassurance.
So even if the economics of who runs the network are changing, centralizing.
Right. The fundamental cryptography that ensures the network security itself remains highly robust, gives you confidence the core tech can withstand threats well into the next decade.
All right, let's shift gears completely now. From mining economics to civil liberties, really. Specifically, this massive privacy battle unfolding in the European Union, the proposed chat control law.
Yeah, this has really set off alarm bells among global privacy advocates. And the core requirement, that's the really controversial part.
Which is the mandated client-side scanning.
Exactly, meaning scanning your private messages on your device before they even get encrypted.
It just sounds fundamentally broken.
Yeah.
I mean, end-to-end encryption is designed specifically so only the sender and receiver can read the message, right?
Precisely. So if the EU mandates scanning before encryption, they're essentially forcing companies to build a master key or, a surveillance backdoor right into the device itself. Critics argue, quite strongly, that this just defeats the purpose of digital trust. It creates a universal surveillance risk, sets a really dangerous precedent that, frankly, violates established EU privacy rights.
Even though the goal is supposedly good, detecting illicit content.
Right. But the mechanism they're proposing undermines security for absolutely everyone, including people just making, say, digital payments. It weakens everything.
And the political situation. Where does that stand? It's getting close, isn't it?
It is. It's on a knife edge. 15 European countries currently support the move, but they're still short of the majority needed.
And Germany is the key.
Germany's decision looks like it will be the tipping point. If they shift to support it, the law passes. It's that critical.
Okay, so this raises a big question then. What role can decentralized tech play here as a form of resistance?
It's a really important question. Now, look, blockchain can't magically prevent mandated scanning if it happens right on your device.
Sure, if the mandate is at the OS level or something.
Right. But it absolutely offers technologically superior, more resilient alternatives compared to centralized platforms like WhatsApp or Telegram.
How so? Is it just about avoiding a central point of control?
That's a huge part of it. It forces innovation by design. Think about Web3 messaging apps, Status, XMTP, Session. They're built on distributed infrastructure.
Meaning no single server. no corporate gatekeeper.
Exactly. There's no central company that the EU can lean on and force to insert a backdoor. You eliminate that single point of failure. It's architecturally different.
Okay, that makes sense.
And we're also seeing advances in cryptography itself. Some platforms like TIO are exploring zero-knowledge proof cryptography.
ZK proofs. Heard a lot about those. How do they help here?
Well, they allow you to prove something is true, like, say, proving you're human without revealing any of the underlying data. It can even hide metadata, which is often just as revealing as the content itself, potentially much more private than even Signal or Telegram.
Interesting. And what about just persistence, making things hard to shut down?
Yeah, for long-term resistance, decentralization is key there too. Protocols like RAND's protocol or Farcaster focus on distributed identity, decentralized social media.
Right.
And then you have decentralized storage solutions, IPFS, Arweave. Once information is posted there, it becomes virtually impossible to censor or shut down globally. It's just out there. Okay, let's try and connect this regulatory environment we've just been talking about directly to geopolitics. Because the EU isn't just regulating privacy. They seem to be weaponizing financial technology now, too.
You're talking about the new sanctions package against Russia.
Exactly. The European Union announced its 19th package of sanctions against Russia, obviously in response to the escalating conflict in Ukraine.
And what's new this time? What's the crypto angle?
Well, crucially, this is the very first time the EU has explicitly included restrictions targeting cryptocurrency platforms and transactions specifically related to Russia.
Ah, okay. So this really moves crypto from being, a niche financial tool
To a full-fledged geopolitical weapon, or at least an instrument in that toolkit.
Right. So what's the ripple effect? For Russian crypto holders, for instance, what do the sources say they need to do?
Well, the consequence is pretty immediate, according to the Q&A we saw. They essentially must move funds out of any EU jurisdiction. They have to turn towards fully decentralized solutions.
Like DXs, decentralized exchanges.
Exactly. Or just use non-custodial blockchain wallets directly. Maybe rely on stablecoins like Tether, assuming they aren't also targeted eventually.
So this kind of showcases crypto's utility in bypassing those centralized gatekeepers, the geopolitical tool aspect you mentioned.
It definitely does that. But there's a flip side. It might also scare off more casual, maybe risk-averse investors globally. They see these new legal complexities, the weaponization. It could dampen broader adoption enthusiasm. It's a mixed bag.
Okay, so the EU is actively using crypto in its foreign policy. Let's look domestically now at the U.S. The regulatory pendulum there seems to be swinging pretty wildly.
That's one way to put it, yeah. We recently heard former SEC Chair Gary Gensler reflecting on his time, his era, and he expressed pride in his achievements.
And his legacy. I mean, it's generally seen as one of pretty aggressive enforcement, right?
Oh, absolutely. Many observers called it a regulation by enforcement strategy. Under his leadership, the SEC sued major firms like Binance, Coinbase.
Classified many cryptocurrencies as securities.
Right, and launched actions that were widely perceived by the industry as Operation Choke Point 2.0.
Can you remind listeners what that refers to?
Yeah.
Operation Choke Point 2.0.
Sure. It harks back to earlier regulatory actions where the government allegedly pressured banks to cut off services to industries deemed high-risk payday lenders, firearms dealers back then. The accusation in the crypto context was similar pressure on banks to de-risk crypto firms.
So effectively starving them of access to the traditional financial system.
That was the accusation, yes. Gensler's public focus, though, was consistently on investor protection and pushing companies towards traditional financial disclosures like quarterly earnings reports. Very traditional view.
Now, the political backdrop here, it's kind of unavoidable when discussing this era based on the source material.
It is. The sources we reviewed mention the heavy political donations made by figures like Sam Bankman-Fried. There is a figure mentioned of up to $1 billion, possibly directed towards left-leaning administrations.
And some commentators argue this influenced the previous administration's focus. It's sort of hostility towards decentralized players.
Yeah.
We need to be clear. We're just reporting what the sources and commentators suggest here.
Exactly. We're reporting the context provided. And that context contrasts sharply with the current situation where the momentum under the Trump administration has clearly shifted towards a far more pro-cryptocurrency stance, especially favoring domestic Bitcoin mining operations. Quite a swing.
Okay, let's pivot away from the regulatory battles for a moment. Look at a genuinely positive tech story. This one's coming out of the UAE. Showing AI's promise outside of just finance or crypto.
Yeah, this is fascinating. Abu Dhabi has launched an AI-powered MRI technique. It's called FlashStar, and it's aimed at faster multiple sclerosis diagnosis.
MS diagnosis.
MS diagnosis. Okay, what's the breakthrough here? How does the AI work? So this tech, it's a collaboration between NYU Abu Dhabi and the Abu Dhabi Stem Cell Center. What it does is automatically identify something called central vein signs, or CVS.
Central vein signs.
Okay.
Okay, why is that important for MS?
Because CBS is a highly specific biomarker for multiple sclerosis. And the challenge for doctors, traditionally, is differentiating true MS lesions from other spots on the brain scans that can look similar things caused by, say, severe migraines or certain vascular diseases. They're called mimics.
Ah, I see. So the AI helps distinguish the real MS lesions from these mimic.
Exactly. FlashStar's ability to quickly and accurately spot this key CVS biomarker significantly improves diagnostic accuracy. And crucially, it speeds up diagnosis, which means faster treatment. For MS patients, that can be truly life-changing, potentially saving nerve function.
Wow, that's genuinely impressive. A great application of AI.
Absolutely. And tying things back, maybe loosely, to the digital asset world, the UAE is also continuing its heavy focus on building infrastructure in that space too.
Okay, what's the news there?
Bybit, which is now, I think, the world's second largest crypto exchange by volume.
Right.
They just signed an MU, a Memorandum of Understanding, with the Abu Dhabi Blockchain Center. And the focus is interesting: advancing Vietnam's digital asset future, specifically in the city of Da Nang.
Vietnam via Abu Dhabi. Okay.
Oh, yeah.
What's the plan for Da Nang?
So Da Nang already hosts a blockchain sandbox environment. The partnership detailed 3 specific pillars to build that out.
Which are?
First, enhancing digital asset liquidity, basically making it easier to trade assets there by improving connections to international finance hubs. Second, boosting ecosystem connectivity with global partners. And third, strengthening infrastructure security.
Making it a safe, sort of risk-controlled environment for digital assets to develop.
Precisely. It really shows the UAE translating its broader national strategy for digital assets into focused, localized implementation projects abroad, building bridges. #tag outro. So quite a journey today. We've covered some major global tensions, haven't we?
Definitely. That balance between, say, Bitcoin network strength and the very real risk of centralization, which seems to be getting accelerated by states entering the mining game.
Mm-hmm. And then that regulatory tug of war in the EU. Privacy versus surveillance with chat control.
And also the rapidly shifting geopolitical use of crypto, really highlighted by that 19th sanctions package against Russia, including crypto for the first time.
Right.
So if we try to synthesize this, what does it all mean for you, the listener? If we look at the EU's chat control push and the EU's sanctions targeting crypto platforms,
Right.
well, there seems to be a clear pattern emerging.
What's that?
Centralized gatekeepers. Whether they handle your private messages like WhatsApp or your financial transactions like maybe some exchanges.
Yeah.
They're the primary targets of these global regulatory actions. They're the choke points.
That's a very sharp observation.
Yeah.
They are the easiest points for regulators or governments to apply pressure.
Which leads us to, I think, an important final question for you to consider. A provocative thought, maybe?
Okay, let's hear it.
Given that this regulatory pressure is consistently forcing these centralized platforms to, well, compromise their users in some way, whether it's privacy or access.
Right, compelled cooperation.
Will this sustained, pretty heavy-handed global regulation, will it ultimately backfire on the regulators in a way? Could it actually accelerate the necessary innovation and adoption of truly decentralized, more anti-fragile alternatives worldwide?
Making them the standard, perhaps, rather than just the niche alternative, because they're the only things left standing that can resist.
Exactly. Is the world inadvertently forcing the market to build real resistance into the system by attacking the weak points?
That's something to definitely mull over. Will pressure breed resilience and accelerate the shift to decentralized systems? A really interesting question to end on.
Keep that thought in mind as you track these developments. Thanks for joining us for this deep dive.